What is going on, traders? Welcome back to the Traveling Trader. In this video, I wanted to talk about the S&P 500 and why we are more likely to hit all-time highs before seeing a retracement. And then I wanted to go over my top 5 long-term growth stocks that you can keep in your portfolio regardless of what the market is doing, and I'll show you why that is. So without further ado, let's get right into it. Looking at the SPY, here's the SPY on the weekly chart. You could see that really during this whole bear rally, right, since we hit the market crash low and started recovering, that we've only had one period of sideways trading where we spent about 4 or 5 weeks at this range trying to crack the 0.618 fib level. And this is just a Fibonacci number. If you guys aren't familiar with that, it allows us to try and pinpoint where we're going to see some resistance. And you could see that the 0.786 fib level, we broke right through it and found some resistance here at around, 322 on the SPY before retracing again. Now we could see another period of sideways trading over here. It looks like we're spending about 3 weeks here, which is another, potential box or another potential rectangle. But we are only 8% away from all-time highs, and there really isn't any resistance besides this 322 level between here and there. And the markets are only, or the economy is only reopening further and further. I know we are seeing some spikes in the data, but it's not clear whether those spikes correlate to increased testing. And the government already made it clear that they're not going to shut down the economy fully again. Mix in the fact that the Fed is coming in guns a-blazing, utilizing everything in their power, every strategy that they can think of to pump the markets up. And they already said that, as long as the pandemic is a thing, they're going to pull out all of these stops and not really let natural price discovery take place until after the pandemic is no longer a thing. Now, this intraday volatility on the SPY, I know we're looking at the weekly chart, but if we look at the daily chart, this intraday volatility on the SPY where we're seeing, openings and closings, swings of 2, 3, 4, 5%. This is really good for day trading. And I sent this out in a video yesterday, my day trading strategy for the SPY, where I have the price oscillator using my settings. I did a video on that as well. I'll link it here. But basically, when the price oscillator is showing that we are overextended, what I'm doing is I'm buying put with the nearest expiration, one strike out of the money, and selling it for profit minutes later. This is a 1 minute chart on the SPY, and this works really well during the market opening, the first couple hours of market opening, when there's a lot of hysterical trading and you tend to see these peaks and valleys more so often. So, the first few hours of trading today, the first couple hours, I hit this about 5 times, buying calls here, buying puts at the top, buying calls at the bottom, selling it minutes later. And after the 2-hour mark, I only managed to do this once. But if you're interested in that day trading option strategy, check out my video from yesterday. I send out all this in the trade alerts, so sign up if you want access to our private trading group below. So that's how I've been taking advantage of the intraday market volatility with the SPY. But looking long term, like I said, there's only 8% left before we get to all-time highs. So in my view, there's no reason why, even if we trade sideways here for a bit, which it looks like we're doing, why we don't hit that all-time high first before seeing any sort of major retracement. It's more plausible that we do than we don't. All right, let us go into the top 5 growth stocks, top 5 stocks that you can put in your long-term portfolio at this point, even though we are near market highs. And this is all based on data and based on the charts, looking at it from a long-term perspective. Looking at Waste Management, this stock is just a beast. I mean, this is Waste Management's chart. You can look going all the way back to the year 2000. It's just one long uptrend. And if you have the opportunity to buy, Waste Management on if you have the opportunity to buy Waste Management on the on the retracements to the major moving averages, such as the 200 weekly moving average or the 100 weekly moving average, then it's proven history over 20 years that this is a solid long-term hold in your portfolio, regardless of the blips and crashes that really don't register on the radar if you look at this from a long-term perspective. So Waste Management, definitely in my long-term portfolio. Another one is a tech stock that still has not yet matched up to its peers, but looking at IBM's financials, you could see that even back in January, this was considered a good buy before the crash. IBM's PS ratio, which is price to sales ratio, is 1.64 compared to its industry average of 2.09. So even back in January, based on what its sales numbers are, it's priced a lot less than its peers in the same industry. And again, this is back in January. So if you look at IBM now, you could see that we're trading in a sideways range, but still, well out of bounds from where it usually trades. So picking up IBM for the long term at this price level, still at a discount, is a good bet in my opinion. It also pays a $1.63 dividend, which is more than most companies pay. And if you take a look at it over, say, like a monthly chart, you could see IBM's growth over the long term. The next stock we're going to look at is Kroger. This is a good addition to your long-term portfolio as well, especially since Kroger has really crushed it in earnings a couple of days ago, but it has seen a retracement since then. So it's currently 6% down today, hitting that 100-day moving average. And if you look at Kroger's earnings, I mean, it surpassed estimates significantly, came in at $1.22 per share with an estimate of $1.12. The company's digital sales surged 92% as well. So I definitely like Kroger here, and I'm picking it up for a discount at the current price level since it retraced to the 100-day moving average, which it doesn't, in the last year, it's done a couple of times, and every time it's done that, it has since risen. So number 3 on the list is SPG. This is one that we swing traded when we picked it up after it popped above the 21 moving average, hit a high of 95, a swing high of 95. But SPG is a pretty consistent stock otherwise. Trading before the pandemic, trading between 145 and about 190, just in that tight range there. And it's currently priced at $72. So I like this both for the fact that it's a growth stock, a good long-term hold, but there's a lot of value here if you're buying before the reopening. SPG is a property group, a property company that focuses on malls, right? So as we expect retail to kick back in and malls to open up, and we see the sales numbers surging, SPG is a certainty in my portfolio. And the last long-term stock we'll look at, the last growth stock we'll look at, is BRKB. This is Berkshire Hathaway. I know Warren Buffett right now is not really a popular guy with all these day traders shitting on him, but the focus of this video is long-term holds. And if you look at BRKB, again, I mean, this is its weekly chart. When we see BRKB retrace to the 200-day moving average, then it is a good pickup for a discount. And this is a massively profitable company with a lot of various holdings. So looking at the chart, this retracement to the 200-week moving average is a good pickup spot in my opinion. And I'll just go over a couple of swing trades and day trades that we had, since that tends to be a popular topic. And really, that's the way that I like to trade on a day-to-day basis. I'm not always looking for long-term holds. I tend to buy up long-term holds in bulk when they're at a discount, and then use swing trades, options, day trades, etc., to boost my portfolio on a day-to-day basis. So looking at RPRX, this is one that I did a video about a couple of videos ago. It IPO'd, and I said this could be the biggest IPO of 2020. It IPO'd just 3 days ago, as you see 3 daily candles here. And it is up now 19%. I would likely just hold on to this because obviously it's a gamble. It's an IPO. There's a lot of hype behind it. It's an already successful private company with financials to back it. So I'm definitely going to hold. And it's in an industry that is hot right now, right? So the biopharmaceutical industry. NKLA, this is one that has been very popular among the YouTube and Twitter day trading community, but it's currently forming a bullish pennant and can break out of here. We picked up NKLA when it was finding support at around $60. And I also have some NKLA options that are expiring tomorrow that look like we are most likely going to collect 100% on. It's a $62.61 credit put spread that we got about 80 cents for. If we take a look at my the option plays that I have open, I have a couple of put credit spreads on NKLA, one expiring tomorrow, one expiring next week. And here are all the iron condors and spreads that we're currently in. Facebook, I'm up 98% on. Inovio, this is another biopharmaceutical company. Sent this out in the trade alerts, up 38% on, the NVIDIA Iron Condor up 42% on. So yeah, if you want access to all of these option trades and swing trades / day trades, including the now infamous SPY trade using my indicator, that link is in the description. So sign up if you want access to that. If you need help with options or just general trading training, then sign up for the one-on-ones. I take a handful of people every month, maxed out for June. The next openings will be July 1st. Sign up. Same link is also in the description, and they go really fast. So make sure to sign up for on July 1st if you want a spot. Subscribe to the channel, hit that notification bell, leave a comment. Let me know what it is you're trading. Get active in the comment section. Help each other. Help me out. Leave a thumbs up if you got anything out of this video. Stay safe out there, traders. Peace.